Hello and welcome to the April 2022 episode of the Pre-sale Pulse. This is a real estate show dedicated where we talk about everything happening in real estate across Metro Vancouver and the Fraser Valley. Now, I'm Ryan DeLon, and of course, here with me today is my partner, the disruptor of all things real estate marketing related, Emily Canada's marketing rock star, Susanna Gonsalves.
Thanks, Ryan.
Whoa, thanks, Ryan. That was so Thanks, Ryan.
Thanks, Ryan. I'm getting used to them now, so you need to up your game. So today we are filming from our beautiful Frame project. Frame is by Coromandel and Peterson Group, located in the beloved East Vancouver neighborhood, Kingsway and Earls, and just steps from 29th Avenue Station. These 217 homes are currently previewing. We're going to be releasing very, very soon. If you have not been in yet, I highly recommend that you do so. These homes will not last long, and we're very lucky today to be able to film from here.
I think what really stands out is you have two development partners that are some of the most trusted in our space. And we also are ground zero for a neighborhood transformation, and that's what makes Frame so unique. So very excited to be filming today. Now, when your year-over-year benchmark comparison for sales is an all-time record, it's not hard to imagine where you have to go from there. And yet real estate values are still driving hard. Now, while the pace is calmer than a year ago, thank goodness, Metro Vancouver home buyer demand still remains high. There is a sharp focus today on rising interest rates, and the market seems really poised to take action. Pricing continues to experience upward pressure due to lack of supply, and this is not news to those even remotely following the trends. Now, the number is about half of where we need it to be expecting a more balanced market. And what that really means is that we have twice as many transactions as we'd like to see, driving high sales ratios, and ultimately that means price escalation.
So the Pre-sale Pulse is all about recapping both the pre-sale and resale marketplace over the past 30 days. Today we're going to touch upon industry and market trends, ensuring our subscribers feel like they have their fingers on the pulse and become real estate intelligent. Now, if you are looking for market data, information on a specific marketplace, or recommendations on product design, our internal MLA advisory team is active in all major markets across Canada, so reach out to us using the links below. In today's episode, we're going to dig deep into macroeconomic trends such as continued inflation, geopolitical instability, and definitely a possible accelerated schedule of rate increases, which is almost guaranteed. Highlight some of the highly anticipated and upcoming pre-sale project launches, and take a closer look at the slightly calmer yet still very elevated resale market.
Now, to start things off, let's begin with an overview of BC's economic outlook. Recent numbers released last week by Stats Canada show that the Canadian real GDP increased 0.2% in January from the previous month. Now, that's despite Omicron headwinds, and this is good and bad at the same time. On the positive, we're doing well. This is in line with the market expectations, and Stats Canada predicting a 0.8% rise in February as restrictions lifted. Now, on the flip side, inflation continues to be on everyone's minds. Inflation in February is 5.7%, and it looks to be even higher in March. And this is the highest in 3 decades. You almost have to go back to Kim Campbell back in the early 90s, whereas up from 5.1% BOC Q1 prediction. According to recent global McKinsey surveys, geopolitical instability is now perceived by executives to be one of the biggest threats to both global and domestic economies. This is replacing COVID-19 and everything that we felt from the pandemic, and which has been really the top answer for the past 2 years. Now, the Ukraine conflict is also a hot topic today. The subsequent Russian sanctions have resulted in steep gains in energy, petroleum product prices. Gasoline's up about 8% month over month, and it's currently about $130 a barrel. These are big numbers, and has a huge impact on spending and household incomes. Now, while we like to think that the increased oil prices as supporting Canada's oil and gas, it does also translate into new challenges for other sectors of our economy. One of the challenges inflation poses may also be in the housing and development industry, where rising construction material costs have been an ongoing concern. Some expect between 5 and 10% over the next 12 months. Housing starts in Metro Vancouver. These are down about 38% in February from the same month last year. That's substantial, especially considering the supply challenges that we all know that we're facing. And this is really important because the census shows that per capita housing was unchanged in 2021 versus 2016. This is meaning that we are nowhere closer to alleviating some of those housing supply challenges that we've been talking about. So all of these factors together may mean an accelerated schedule for both rate increases, as the Feds have recently signaled more aggressive moves to come. Many analysts are now predicting that multiple half percentage point rate increases this year, up from the previous estimates that were kind of sitting around 25 basis points not too long ago. The next rate increase that's coming, expected to come by the time that this video airs, it'll be on its heels. And lastly, as we continue to transition out of the pandemic and what that's meant to all of our lifestyles. Rental prices are climbing, vacancy rates are dropping as renters and immigrants return to population centers. And when we think about other markets, gold is sitting just under $2,000 an ounce at 1937. Bitcoin's trading around $57,000 Canadian. In Tesla stock, it's up 30% from its low in March.
With that, let's talk about the pre-sale market. Well, I'm sure we've all seen headlines on how the resale market has moderated from the historic high we saw in March of last year. We know it's still very active and continues to push people into the pre-sale market. Now, our same month absorptions were 59% in March, which is the exact same rate as March of last year. The difference, 2,300 homes this past month, 900 more than last year. This shows that market demand for pre-sale product was able to keep up with supply coming onto the market.
While we are seeing moderate market activity, developers continue to be bullish and really are pushing to bring programs to market over the next 4 to 5 months. In March, we saw 17 programs launch in Greater Vancouver and the Fraser Valley, and the programs were a near even split between the Fraser Valley and GB. Now, in our pre-sale pulses in February and March, we spoke to the first wave of concrete towers coming to Greater Vancouver this year. These programs were predominantly in Brentwood and Metrotown markets, and all of them launching within 2 to 3 weeks of each other. A ton of supply was about to hit the market. They achieved approximately 62% absorptions, with programs such as Nouveau and Concord Brentwood's Oasis seeing especially strong market attention. Since launch, Oasis has sold out of released inventory in its West Tower and is now actively preparing to start appointments for its East Tower.
Finally, let's see what we can look forward to in April. We are forecasting 13 programs over the next month, bringing just under 2,000 homes to market. Langley Woodframe is going to get a lot of attention. Programs such as Icon, Hairtown Center, and Park and Maven are all expected to come online over the coming weeks. And interesting to see more wood frame this month than concrete, but we do have a few larger scale concrete projects coming later this spring, which we'll get into next.
Suze, why don't we start with Frame by Peterson and Coromandel?
Yeah, so as I sort of mentioned at the top of the show, located off of one of Vancouver's most connected corridors, this program is going to give buyers the opportunity to be in on that ground floor of one of Vancouver's most up-and-coming communities. The project includes 217 homes and 2 honestly really beautiful rooftop terraces. Best of all for me are some of the stunning views on the higher floors, especially of those North Shore mountains. And of course, we can never talk enough about the proximity to SkyTrain arterial routes. Very connected, very central.
Next up, let's talk 1818 by Landa Global. Now, this is one of the first projects to launch in the downtown core in 2022. Prices start at $1.7 million, and the blend's expected to be around $2,400 per square foot, bringing it on target with 1515 and 1289 Nicola. Now, for a bit of background, the program originally launched in late 2019. Back then, it only included 36 homes over and around 15 stories. Market interest wasn't there, and so they are recently reconfigured. They've increased density to 52 homes over 21 stories. Now, it's likely to be giving them an easier time on sales floor because it's bringing the aggregates down, and that's important. On a similar note, following programs launch in our downtown core, there's a trend towards breaking up penthouses to offer more smaller homes over a single larger penthouse and sub-penthouse product. This is a trend that we expect to continue across all marketplaces, not just the core. Instead of targeting a very narrow market of international buyers, it's allowing programs to really emphasize more local affluent demographics.
Yeah, I really think that depth of market is the key there, right? That at that luxury offering, downtown penthouse, it's a small pool of buyers, and so everyone is, I think, trying to create opportunities at some smaller price points.
I'm also thinking about some of the programs that we're working on right now in Coquitlam, Brentwood, and Metrotown. We're active in all of those markets in really big ways, and we're seeing a similar trend in how we're dividing up penthouse square footage in those markets too.
Agreed. Now, speaking of West Coquitlam, Presidia by Lettingham and Callister is also now taking appointments. This project features 178 homes and almost 10,000 square feet of amenities. Presidia is just a short walk to the Burquitlam SkyTrain station, close to the services amenities along both North Road and Clark Road. Based on initial pricing, this project is anticipated to be blending around $1,100 per square foot. Offering is primarily larger product, with 1-bed and dens being the smallest product, starting at about $669,000. With Band, Elmwood, and our very own Alina on the heels, I think we're setting up for a very competitive launch period in the West Coquitlam market.
I think we have to talk about Alina. This is coming quick by Strand. Our expectation is to be in market in the coming days. Registrations are happening now. It's 246 homes, incredible architectural design. I think what's really exciting about that too is also the degree of wellness and health that we're pushing within this program. Very excited, and you can expect more from us in the coming days. Check out that link below in order to make sure that you're registered for that program.
Yeah, the designs for the rooftop amenity are stunning.
Yeah. Not too far away in Port Moody, Chroma by Fort Living. It offers 1, 2, and 3 bedroom homes. This project features spacious homes in an industrial design style. Marketing for the project is really emphasizing the quieter lifestyle available in Port Moody, and we know that that's true. All homes come with one parking stall. Pricing is anticipated starting around the low 600s, 6099 seems to be the number. This is for a one-bedroom and den home. We're seeing programs in West Coquitlam blend above $900 per square foot, so I think we can expect something similar for Chroma. It'll be competing directly with Mosaic's Moody Yards, which is slated to begin sales in May.
Let's dig into the resale stats now. Now we are officially into our spring market with over 4,300 resale transactions in March. Now remember, it was just last year, March of 2021, that we saw the highest number of sales we have ever recorded in history. So by comparison, we're down about 24% on a year-over-year basis, but that's not a bad thing. Don't be fooled by that comparison. We remain well above historical levels. Compared to that 10-year average, last month's sales were still up 25%. Now in terms of supply, we're seeing positive increase in active listings. In total, there were 7,600 listings at the end of March. That's 13% more than February. We'll take what we can get. It's still not enough, but it's still better than nothing. And Ryan, we saw that once again reflected in the pricing this month with some of the big monthly games. Why don't you speak to us about that?
I love it, Suze. Let's jump into some of those resale stats. Now, I think that it's an important note to keep in mind that while we're likely seeing some headwinds to the overall demand, we're likely going to see prices continue to stay elevated throughout the year. Right now, Metro Vancouver benchmark price, it's up around just over 10%. That's substantial. Across the board, Metro Vancouver for all home types appreciated 3.6% in March over the previous 30 days, and it's currently set at a price of $1.35 million. It's a really big number to where we were 18 months ago. Now, in particular, we're seeing very strong appreciation in townhome product with a monthly gain of 4.4%. Month over month. Those are crazy numbers. Specifically in Burnaby South, townhome prices have soared by 6.5%. That's just 30-day appreciation. That's unbelievable. I can't think of another time in our careers that we've seen this.
Those are incredible gains month over month. And of course, we're seeing that reflected in the sales to listing ratios as well. As many of you are aware, a market with ratios above 18% or 20% is considered a seller's market. In March, the ratio reached 57%, elevating Greater Vancouver status as a strong seller's market. That's the second highest sales to listing ratio in the past 2 years, second only to our record-breaking March of 2021 when we were at about 62% across all product types. This means that while total sales activity is down from that historic month, it's no easier for buyers in today's market to find a home. Detached homes creeped up to 39%, while townhomes and apartments hit 73% and 70% respectively. Those are big numbers, especially on the apartment side, where again, we haven't seen those listing ratios that high since 2017. Now, as this continues and as buyers fight over the same limited pool of listings, we will likely see prices continue to be pushed upwards as we have been seeing already. No end in sight at the moment. And of course, as we mentioned earlier, we're seeing a lot of spillover into the pre-sale market because people just can't find what they need on the resale side.
I think what's really interesting too, if we just take a step back and we think about the last 30 days, and then we reference what happened a year ago, but then we zoomed out and said, what has happened over the last 30 years? We just experienced the second hottest month in real estate transaction sales in the last 30 years, which is something that is really incredible, but then at the same time giving us a fair amount of concern for what that could mean in the future. Suze, I think that that's another wrap of a Pre-sale Pulse. And to our viewers, if you found some value in today's episodes, hit that like button, share, comment, subscribe to our channel. This gives you first-class access to Newswire, our daily roundup of the latest real estate news. Subscribers also get early access to the Pre-sale Pulse, market insights, and the latest projects breaking ground, like Alina and others. And of course, we can't forget Frame, so make sure you hit those links. MLA Advisory is going to continue to play a significant role in every major market across Canada. So if you're in search of a market perspective or you're looking for a second opinion, contact us by visiting the links below.
Yeah, in addition, you can submit your questions, any requests you have on trends or insights you want us to talk about or that we haven't covered already. We want to ensure that the Pre-sale Pulse is your preeminent source of real estate intelligence. From both Brian and myself, thanks for tuning in, and we'll see you next month.
Thanks for stopping by.